For the last 5 years, the watch world was dominated by the flipper, an army of speculators who turned Rolex steel sports watches into a new, untouchable asset class. They laughed all the way to the bank while real enthusiasts were told to wait years. Well, the party is over. The bubble hasn't just burst, it has violently collapsed. Today we're looking at the hard data that proves why the Rolex flipper is, quite frankly, absolutely screwed. If you want to see how the luxury market is really working, subscribe to Opulent Oasis, like this video, and hit the notification bell. To understand the collapse, you have to understand the system that made it possible. This wasn't just a few guys selling watches, it was a sophisticated flipper economy. First, you have the flipper. This is the person who buys a new, high-demand watch, like a steel Rolex, from an authorized dealer at retail. Their only goal is to immediately resell it on the secondary market for a massive profit. That secondary market is called the grey market. It's crucial to know this is not the black market. Those are fakes or stolen goods. The grey market trades in real, authentic watches just outside the brand's official network. During the bubble, the grey market became the de facto stock market for watches. The prices there were seen as the real value, making the retail price irrelevant. But how did flippers get all the watches? That brings us to the most important player, the authorized dealer, or AD. They were the complicit source. Flippers didn't just walk in, they got inventory from the ADS. The wait list was a lie. It was an interest list based on relationship selling. And how did you build a relationship? By spending. A DS forced customers to buy tens or even hundreds of thousands of dollars in high-margin, less desirable stuff, like diamond jewelry or gold dress watches, just to get the privilege of buying a low-margin steel sports watch. A confidential AD source revealed a gold watch is roughly 4 times more profitable for the dealer than a steel Submariner. The flipper was simply the most rational customer in this crooked system. They were the ones willing to absorb the cost of the bundled junk, knowing they could sell the steel watch, pay for everything, and still turn a huge profit. The AD lied to genuine customers about no stock while reserving it for these high-spending flippers. This system was primed, but it took a perfect storm from 2020 to 2022 to create the speculative mania. First was macroeconomic mania. The global response to the pandemic injected trillions of dollars of excess cash into the economy through stimulus and low interest rates. People were stuck at home, unable to spend on travel or restaurants. That discretionary income was redirected into tangible luxury goods, creating a massive demand shock. Second was the crypto wealth explosion. The 2021 crypto bull run created a new class of nouveau riche. They treated in-demand Rolex models like altcoins, buying them just to flip them for exponential returns. Reports showed crypto millionaires were spending an average of $80,000 per transaction on watches. This was a massive, purely speculative demand shock. These two tsunamis of cash hit the foundation Rolex itself had built: artificial scarcity. For decades, Rolex has consciously and targetedly managed its production to create a state of scarcity. This, combined with marketing, creates prestige, which fuels more demand. The result? The narrative shifted from watches to investments. But this whole bubble was built on temporary factors, and it was guaranteed to collapse the moment those factors were removed. And in 2022, it did. The collapse was a quantifiable, sustained, and severe market correction. The factors that created the bubble were responsible for its demise. The primary catalyst was the crypto crash. The implosion of FTX and other projects wiped out trillions in speculative wealth. Those over-leveraged crypto buyers were forced to panic sell their most liquid assets to cover their losses. Their first assets to go? The Rolexes they had just bought. The market was instantly flooded with inventory, and at the same time we got the macroeconomic reversal. Surging inflation and aggressive interest rate hikes reduced disposable income. The cheap money era was over. Finally, the world reopened. That discretionary income that had been funneled into things was now being spent on travel and leisure once again. The market hit its absolute peak in March 2022. What followed was a financial rout. The market saw 11 consecutive quarters of declining prices through the end of 2024. Prices for the most desirable models from Rolex, Patek and AP fell by 15 to 20% on average. Let's look at the Wipeout Ledger for the flipper's favorite models. First, the ultimate trophy, the steel Rolex Daytona. At its peak insanity in March 2022, this watch transcended horology to become a trophy asset. Sales data shows peak transaction prices hitting $54,000, even $56,000. That was nearly 4 times its retail price. Today, that premium has been eviscerated. Current 2025 listings are down to $32,000 to $35,000. That is a catastrophic 40 to 50% collapse in value from its peak. Next, the flipper's favorite inventory piece, the Pepsi GMT Master 2 on the Jubilee bracelet. At its peak, this watch surged to over $26,000, with some sales hitting $32,000. As of 2025, prices have normalized, falling to a range of $21,000 to $23,500. That's a 30 to 35% drop. Finally, the market bellwether, the Submariner date. At its 2022 peak, this watch hit $18,500. Today, the current market price has fallen to between $13,500 and $14,700. This is the most critical data point. The Submariner's entire price gain from the 2021 to 2022 bubble has been completely erased. It's now trading at or even below its pre-peak 2021 price. This isn't financial advice, but a simple observation. The profit margin has been compressed to a point where, after factoring in the bundled jewelry, platform fees and taxes, the business is no longer viable. Flippers who used borrowed money got caught in a liquidity trap, and dealers who hoarded pieces are now stuck with toxic inventory. They are offloading at massive losses. Anecdotes from 2024 describe grey dealers refusing to reduce pricing because they don't want to take a loss. They are praying and hoping the market will return. Other dealers who tried that went bust. Just as the grey market was reeling, Rolex itself made a deliberate, strategic and ruthless move to reclaim total control. They launched the Rolex Certified Pre-Owned program. The timing was not a coincidence. Rolex launched its CPO program in late 2022, precisely as the secondary market was collapsing from its peak. This was a controlled reset designed to eradicate the grey market and reclaim control. Here is the genius and ruthless part of the strategy. Rolex CPO watches are priced significantly higher than their grey market equivalents. We're talking 15 to 40% higher. One analysis showed a CPO Submariner date listed for $19,400, while the identical watch on the grey market was trading at $13,600. That's a 42% premium for the CPO certification. Rolex is not competing with the grey market on price. It is stealing its best customers. They are targeting the wealthy, risk-averse buyer, the naive and frightened client who is willing to pay any premium for a factory guarantee, peace of mind, and the official Rolex experience. This is a checkmate move. It squeezes the grey dealer from both sides, it steals their best, highest-paying customers, and it destroys the grey dealer's only value proposition, which was availability and trust. Rolex has now monetized trust, leaving the grey dealer with nothing to compete on except a race to the bottom on price. When you combine this with Rolex's 2023 acquisition of Baccarat, the strategy is clear. Rolex is vertically integrating its own secondary market. The flipper is the target of a deliberate, systematic corporate campaign to eradicate them. The flipper game is over. The 2025 landscape is a return to reality, and the evidence is overwhelming. Symptom 1. The vanishing waitlist. The clearest sign the artificial bubble has burst is that the impossible-to-get watch is now gettable. A 2025 analysis of over 600 user-submitted reports revealed a staggering shift. The average wait time across all models is now approximately 2 months. More than 1/3 of all respondents reported a 0-day wait for their watch. The bellwether Submariner wait time has plummeted from 1 to 3 years at its peak to as little as 3 weeks, with no purchase history required. For the vast majority of models, the consumer can now get the watch at retail with a short, reasonable wait. This completely destroys the justification for paying a grey market premium. Symptom 2. The steel Rolex is a terrible investment. The narrative is shattered. Analysis heading into 2026 is explicitly bearish, with data supporting the thesis that a steel Rolex is now a terrible investment and a financial trap. Here's why the steel Rolex index is down around 40% from its 2022 peak. During that same collapse period, traditional assets like the S&P 500 gained 15% and gold surged 28%. A flipper's capital would have been dramatically more profitable in a simple index fund. Symptom 3. The market has moved on. This might be the final nail in the coffin. It's not just a price correction, it's a fundamental shift in taste. Data from 2025 shows that Gen Z buyers, the next wave of luxury consumers, are not chasing the chunky steel sports watches that flippers are hoarding. Instead, this demographic is driving a fourfold increase in demand for brands like Cartier. They prefer slimmer, design-led, dressier watches over the aesthetic of the past decade. So let's recap why the flipper is finished. The crypto speculator who provided the rocket fuel, wiped out in the crash. The wealthy, peace-of-mind buyer, poached by Rolex's own official CPO program, and the new generation of Gen Z buyers, they don't even want the watches. The market has been cleared of speculators and returned to true collectors, people buying for passion, not profit. For the flipper who only operated on profit, there is no place left in this new market. The game is definitively over. Now I want to hear from you. With prices returning to reality, are you more likely to buy from an authorized dealer, or do you think the official Rolex CPO program is the future? Let me know in the comments.